Warm welcome, everybody. My name is Joachim Gunell, tech analyst here at DNB Markets. With me today, I have the great pleasure to host Cecilia Wachtmeister, who is the CEO of IAR Systems. And we're going to do this as a very informal fireside chat. And if there would be any follow-ups, feel free to reach out to either me or Cecilia and the IAR Systems team. So with that being said, Cecilia, warm welcome.
Thank you.
So embedded systems are obviously the backbone of our digital lives, and your programming tools essentially, is what translates different coding languages into optimized machine codes. Yes. And hence just help us through, what's the elevator pitch with what pain points your software ultimately helps your customer solve, and who are really IAR Systems customers?
Yeah, so the normal elevator pitch is usually that we, like you said, we translate C++ or other programming languages into binary code down to the devices. And we do that in a very, very efficient way so that the code size becomes very small, very energy efficient. And we are also agnostic, so we are not tied to any specific SIP vendor. So we support over 15,000 devices across 20 architectures. So that's normally the elevator pitch. But what is becoming more and more evident where IAR brings value is to regulated markets. Because such as automotive, industrial automation, healthcare, they are really bound by different compliance requirements. So what we provide is certified tools that guarantees that the software comply to all these compliance requirements. And that is really, really important for these regulated industry players. And not only that, because what they need to do is to be able to support, normally they have very long life cycles on their products. If you take an automotive, for instance, they maybe start developing a car right now. They choose a compiler from IAR. Yeah. Then it takes some years to develop that car. And then they have sort of start of production, maybe 27, 28. And then they need to support and maintain that car for 15 years. And that means that they need us to support and maintain that particular version of the compiler for maybe 20 plus years. And that's really where we are adding value. And that becoming very, very more evident for every day, that this is the true value rather than features or compressed size, code size. To have a strategic long-term player that can support those customers, those players, for 20 plus years. Yeah. And that's not all suppliers in the market that actually can commit to that. So the customers that we are really targeting are those that are present in regulated markets, such as automotive, industrial automation, or healthcare. And we can take some examples like Schneider, Denso, Landis+Gyr. Those are the kind of companies. And what they are looking for is a long-term strategic partner rather than just a tool vendor.
Yeah, it sounds once again like a pretty sophisticated type of customer that you have very long-term committed relationships to. So we're now 9 months in to your role as the CEO of IAR. And I accidentally said IAR Systems, but with you putting your hand on the company, it's IAR right now. Yep. So with that being said, you're not new to the embedded world. You've been serving on the board for IAR for 4 years. So just help us here. You pretty recently presented your view for how to shape the strategy of this company for the coming 3 to 5 years. What's the main message that you want to communicate to investors when it comes to that opportunity ahead for IAR, and what will be the key delivery mechanisms to execute on it?
Yeah. So coming back to what I said before, the overall strategy, what we're looking for or what we're setting is to really focus on these regulated markets, because that's where we think and feel that we can deliver the true value to our customers. So it's a little bit of a pivot from being a technology provider only to becoming a strategic partner to our customers with long-term service commitments to support these our tool chains for many, many years. But underlying on that, we also have a more sort of hands-on strategy, how to execute on that. And basically you can say that it resides on 3 pillars. So we want to expand our addressable market. Today we are really very, very well, and our sweet spot is within the MCU arena. And we currently cannot support the majority of the MPUs, which is a little bit more advanced devices. And that's what we want to develop support technical. We want to develop technical support to be able to do that. And that means that we will close to double our addressable market. The other pillar is that we want to extend our market reach. So we're investing, first of all, in our own sales force and focusing once again very targeted on these regulated markets. But we're also building up a distributor network across the world because we're not present. We're present in 13 locations currently, but that's not covering the full world. And lastly, on that topic, we're also building closer relationships with our partners within the SiP arena, the device manufacturers, because they want to, that's another channel for us, because they want to make it easy for their customers to bundle everything that is needed together with their hardware. So they are showing an interest to bundle with IAR toolchain. And the third pillar is that we want to increase our share of pocket with our customers. And we're doing that by changing our business model into a SaaS-enabled or SaaS-enabled subscription model, moving away from the current model, which is a perpetual.
Yep.
And so, yeah, that we're doing that, but it's not only a shift in a business model, because we're actually going to increase the value and the offering to our customers while we're doing that.
Because that's very interesting, because once again, to go through this SaaS shift is something that often, call it, at least from a financial standpoint, tend to optically dent sales trajectory and also margins for that bit. But if we take the commercial aspects of this, why do you think that you will be this move will enable you to tap into that larger, call it, customer pocket that you just described with the whole platform offering, as opposed to only, call it, point tools?
Yep. Can I just park that a little bit, because I want to add one thing to our strategy, which is important also, and then I jump over to that one. So what I just described is our organic strategy. Tied to that, when we released our new long-term targets in December, aiming for 20% growth and 20% operating margin, that also we're going to include that we more actively look into M&A. And well, we can take an example, a company that both you and I know very well, HMS Networks, where Staffan and the team, they have really succeeded in building growth and building a larger company through bolt-on acquisitions, and even larger one now lately. But that's something that we believe that we want to look into also. How can we build on and complement our organic strategy with M&A activities? Now, coming back to your question, yes, many companies moving over to SaaS or subscription basically take their current offering and translate that into a subscription model instead. That's not what we are doing. So we're completely changing what we're delivering to our customers in this transition. So what we want to do, one subscription gives access to our customers to our full, complete portfolio. So that is a significant increase of value. So everything will be included, FOSA certified, functional safety certified versions, all our debugging functionality, our code analysis tools and so forth is included in this subscription. And we're going to monetize that we're going to tie it to individual users before it's been tied to actual machines.
Yep.
And we're also but that's going to be the lesser part of the monetization, because we want to monetize according to the value to the customer. So how much it's in relation to the capacity that they are using, how much build capacity they are using. So that's how we're going to monetize it.
And when you think about how you will now be better positioned to align your monetization with the value that your tools ultimately bring to your customers. You were out yesterday in your report and highlighted some customer examples here. So I think you said that 2.5 to 1.5 times higher monetization potential with this, call it business model shift and larger value customer proposition. So just take us through. You launched this on April 1st, so we're only like 3-4 weeks into this, right? So very early days still.
It is.
But very robust pipeline commentary from you, what you've seen so far. So just help us unpack here. So the Q1 results you reported yesterday, that's in the rearview mirror, right?
Yep.
Looking a bit forward here, is this something that you will expect to be very, call it gradual, the uptick here? Or is this something that you already feel confident will actually become something that moves the needle for IAR this year?
Well, we're going to take it in a little bit of a balanced approach in order not to jeopardize our financials, because normally when you do this shift, rather than recognizing all revenue on a perpetual license up front, we now need to distribute it according to the subscription contract time. So naturally, it's going to have an effect on the top line. But we're going to take it in a very balanced approach. And we're foreseeing a couple of years sort of flattish scenario.
Yep.
And then having these subscription revenues really kicking in and generating that growth that we're after. And if you think about it, it's a little bit like interest on interest, right? When you have a subscription model, but also once our salespeople have closed the subscription deal for whatever length of time, in the current world, each month we need to repeat our sales.
Yeah.
Each month. So that will free up capacity in the sales organization to go after new customers or new sales, new subscription sales. So I think we will see, we're quite hopeful that this will be very, very lucrative for IAR in a couple of years' time. And throughout that period, between 3 to 5 years, we foresee that the majority of our revenues will be subscription-based.
Sure, and it will of course enable a whole lot of strategic flexibility to not have to run as fast just to stand still as you would have with the perpetual suite, right? But you actually had a pretty interesting comment here with regards to that. Okay, we all know that you are very well capitalized, a strong balance sheet, and you also at some point would like to tap into that acquisition-driven growth strategy. So is there anything that you would want to, the way I think about it is that you don't have boots on the ground into the MPU world. Is potentially an acquisition a good way to make such an inroad, or do you think that the MPU opportunity to essentially double your addressable market, is that better done, on organic basis in your view?
I think we plan to do that organically on our own, but with a modified. What we're also doing in our strategy is to open up. We've been quite sort of independent, but we're opening up for the broader market to interoperate with open source and other players in the market. But to develop this technical support to be able to address the MPU market, that's something that we're going to do ourselves with the help of using already existing functionality in the open source community.
So cloudier macro, or at least call it tariff-related uncertainty, has been something that has really dominated the investor debate as of recently. And one could argue that enterprise software spend, or software for that matter, should be fairly insulated from that. But then again, there are indirect effects, right? So the US is a very large market for IAR, and you mentioned that, okay, potentially it's here that we have seen these effects accentuate so far. So just help us through how you think about the potential impacts or indirect impacts on, say, project starts among your customers, and whether you think that could become a, call it more material headwind as the year progresses, or if you think that the Q1, call it what you see currently, provides fairly, call it, good insulation.
It's very, very difficult to say, but clearly we've seen an effect in some of our markets. In the US, we've seen a more cautious approach to investments. But the good thing is, and I wrote that in my CEO comments, we see that customers, rather than investing in more of our tools, they are happy with what they have. Yep. So they remain on the versions that they have and the number of licenses they have. But instead, we see an uptake in our support and update agreements. So they want to secure that they have that support going forward. We had a 15% uplift in support and update revenues this quarter. So, but clearly we see that they are more reluctant taking on new investments, maybe starting new projects also, which clearly affects us. But contrary, if we go, and we see a little bit of that effect also in the central of Europe and Northern Europe, longer sales cycle, more cautiousness. Southern Europe, we had significant growth this quarter, so that was really good. But where we really see an opposite effect is actually in APAC. Yeah. APAC as such grew 46%, but China isolated grew close to 200%, 184% I think it was. So, and there, of course, I mean, IAR being neutral, not sort of affected by these ongoing trade discussions and so forth. We see customers there seeking other partners that feels more secure and more outside of those problem areas. And we have some of our competitors not being able to sell into certain customers in China. Or they are affected by these new tariffs, so they become significantly more expensive. And in China, we also note a significant amount of new customers coming in. And I think that's an effect of both this, but also the fact that China is very RISC-V is taking off in China. And we, as you know, we have a good offering in RISC-V, complemented with the normal ARM also. So that's a trend that we see in China.
Because that's very interesting that you touched upon. For once, of course, they call it Switzerland's of embedded tools position that you have, but also the fact that we are increasingly moving to a world with multi-core architectures, and you support both and developers can have flexibility. Have you seen, I mean, if I just look at it from a competitive standpoint, there are some of your competitors who are actually like dropping out of their, call it, them developing new functionalities for your bread and butter business. And then are you seeing competitors moving in the same direction towards supporting both RISC-V and ARM, or is this something that you think that you have a, call it, head start into that opportunity?
No, I think we have a head start. We were really early developing RISC-V support and having also a very strong ARM offering. So that's really playing in our hands now. I would foresee, because one takeaway from the Embedded World in Nuremberg in March was that RISC-V is really coming strong. Yep. So I'm sure we will see our competitors developing that also. Obviously not Kyle and ARM themselves, it's not in their interest. Yeah. So, but other competitors, but yes.
And so open source alternatives in the compiler world has been like a recurring topic, but evidently we see from your, call it, your recent growth trajectory that this is not something perhaps that we need to worry about when it comes to the very, call it, sophisticated strategic partners that you have. Just take us through here when it comes to when you think about the key differentiator aspects of your tool chain, and especially now that you offer it as call it more of a platform offering, what can you bring to the table that customers cannot, and especially open source alternatives?
Well, I think the main differentiator is what we touched upon very early in this conversation, is that we provide certified tools, and we commit also to support those for a very long period of time. So what we're offering is rather a partnership, long-term partnership with confidence, with technical support, with maintenance of the versions of the tools, and that you do not get from open source providers. So I think that's the biggest differentiator. And yes, open source has always been there, but since we are focusing, and that's one of the reasons why we're saying that we really bring value into regulated markets where functional safety is of such importance, and this long term, they have long lifetime cycles, and they need a partner that commit to support individual versions of their tool chain.
Lovely. And on AI, that's I think in the where we have seen true progress when it comes to the productivity gains from AI and generative AI, it's been very concentrated to both the customer support and coding. And hence I think it's a misconception that many think that there is a structural fear that, call it the number of seats in the, in your case, embedded developer world will be cannibalized from this shift. So just help us understand where we are on the S-curve in terms of, do you see that structural threat when it comes to your offering, that there's potentially fewer developers, or do you see this as more like a call it productivity tool for your customers to focus on what really matters?
Yes, the latter one. So we're embracing AI. I think it will do good for our industry. So this is we should never forget that this is extremely technical and very complicated to program small devices like MCUs. So within the foreseeable future, no one believes that AI can replace that. You need that competence. But what AI can do is, like you said, they can help out maybe with some coding, but you always need a developer really checking the code. But where AI definitely can help out is more in testing, generating test cases, generate code, of course, but generate test cases, generate documentation that you always need to have. So that can complement and actually lift away more repetitive tasks maybe from the developers, speed up developing time to market for new innovations for these companies and the developers. So it will complement, it will empower the developers rather than threatening the developer seats. And on top of that, we see that AI we could complement our offering with AI-generated test cases, for instance. That's one of the areas that we're looking into, or documentation, or also helping out on an early stage while you're programming, giving recommendations on, it's code analysis basically. Yeah. Code analysis to check the code while you're actually writing it.
Great. And turning to the year ahead of us, so we're one quarter in essentially, and that was very crisp results and stellar execution from you. When we think about the 3 remaining quarters here, where will your attention be from a management standpoint, and what milestones do you think that we as the investor community should really try to follow during the year?
Well, we're set out on this journey to transform into more SaaS business model, our subscription model. So that's where our focus will be. Converting our existing customers, bringing new customers onto our subscription-based offering. So that's clearly something that we will start reporting on and that you probably should follow, how we're tracking on that, converting our existing customer base. Like I said, we're not going to make a hard cut saying that this is the only way. We will do it in a more balanced approach. But the good thing is that like I wrote, we actually see very good traction, very high interest, both when we were down in Nürnberg at the Embedded World, but also in the follow-up discussions with customers. And we have a very good pipeline, I would say, with subscription leads walking into Q2.
Lovely. And just from a broader perspective, from your vantage point, what would you say are the more like common misconception when you speak to investors or analysts like myself, and when you think about IAR's opportunity ahead?
I think one misconception is probably that we are just a tool vendor. Coming back to what we mentioned several times, I mean, yes, we're providing a tool, but it's not really the performance or the individual features on that tool that matters. What really matters, the true value that we're providing, is of course that tool, but together with that long-term partnership, the commitment that we're going to support it, and that we provide, I think, the broadest sort of functional safety offering combined with our tools. So they are guaranteed to be compliant. The code generated by our tools is guaranteed to be compliant with the existing regulatory standards. So once again, a little bit of a shift of walking away from just being a technology partner to being a strategic long-term partner with, or technology vendor to a strategic long-term partner. So that's a little bit a misconception, I think, because that's the value that we see that we're capitalizing on with our customers. And the other misconception is probably now when we're walking into this our new business model, subscription model, that it's just like for like, moving over from perpetual to subscription, and that's so far away from what we're doing. Like we said before, we're actually, it's rather about how we're packaging our full offering, the value that we bring to our customers. And I forgot to mention before, not only is it that we provide the customers with our full product portfolio, but it's also possible to work in more modern workflows. Yep. So in a cloud environment with new CI/CD processes and so forth, which has a huge value, and we see that that's where the embedded market is heading.
And if anybody wants to follow where the embedded market is heading, I strongly encourage you to go to Embedded World in Nürnberg in March 2026, because there you essentially understand that the developers are very religious about their tools and yes, your position in this deep tech value chain. Thank you very much, Cecilia, for tuning in.
Thank you.
And if there are any, once again, follow-ups, don't hesitate to reach out to either me, Joachim at DNB, or for that matter, Cecilia and the IAR team. So thank you very much for joining.
Thank you.